About market breadth. What is it? Market breadth shows how many stocks are participating in a market move. The market breadth is it equal to the participation of stocks in the market. If you have strong breadth, many stocks are rising. It's a healthy market. Weak breadth, few stocks are rising. Risk of reversal. Why it matters. Markets can rise on a few big stocks, but they last longer when many stocks participate. So for example, here you have in the green a percentage of stocks above the 50-day moving average. So the price is making higher highs and a higher percentage of stocks are above their 50-day moving average. So it's a strong confirmation that the market is participating and going up. If you have weak breadth, price is making new highs, but fewer stocks are participating. And this could be a warning sign of weakness in the overall market, the underlying. Key breadth indicators, so a percentage of stocks above the 50-day moving average. If it's bullish, if it's above 50%, bearish if it's below 50%. Advanced versus declining issues. If it's bullish, you have more advancers than decliners. Bearish if you have more decliners than advancers. New highs versus new lows. Bullish, we have more new highs than lows. Bearish when you have more new lows than highs. There's another indicator here that's called the McClellan Summation Index. If it's rising, it's bullish. If it's falling, it's bearish. Good breadth, healthy market. Weak breadth, higher risk. So real world examples. So for example, here you have a price trending higher. 70 to 80% of stocks are above the 50-day moving average, moving up, strong participation. If the price is moving sideways and less than 40% of stocks are above the 50-day moving average, then there's weak participation. So what's the takeaway? Market breadth, participation of stocks in a market move. Strong breadth confirms trends and leads to more sustainable moves. Weak breadth is a warning sign. Fewer stocks equals higher risk. Use breadth indicators to make stronger, more informed decisions. Follow the participation, make stronger. Strong markets have strong breadth. So the next question would be, logical question would be, what is the 50-day moving average currently? Great question. Here we are. So special shout out to Dave Keller. He has great work always. I love his work. Here is the S&P 500 large cap index, and then below it is the S&P 500 percentage of stocks above their 50-day moving average. And I put them right above each other so you can see the correlation. So what I'm looking for is this. When we're below the 50% line on the y-axis, you can see that when this trend starts going down, less stocks are participating. What happens to the S&P 500? It falls. Same thing here. When the participation starts to drop, what happens to the S&P 500? It falls. Conversely, if you have high amount of participation in the above 50%, 50-day moving average, you can see there's a large amount of participation. Now what happens to the S&P 500? It starts moving upward. So that is the latest data from August 2020, August 2024, 25, and 26 for both. And the axes are the same. The x-axis for the calendar is matching exactly the top and the bottom. If you found value, please like and subscribe. If you want to take a deeper dive, I have a Patreon membership, various tiers, and all of these questions are answered in the various tiers, in the higher tier, And a disclaimer, whenever you have a chance to read it. Have a great day.